I'm Jason Stipp from Morningstar, and we're taking a look at the week ahead with Morningstar Markets Editor Jeremy Glazer. Jeremy, thanks for being here.
You're welcome, Jason.
You say next week we're going to get some hints about the consumer with some economic data and a few earnings reports. Let's start with the economic data. We get retail sales this week.
Yeah, on Thursday, we'll get the retail sales number. And if you'll recall, in June, this number was quite weak. It was down 0.3%, and that includes everything, down 0.2% if you exclude autos and gas, which is how our economist Bob Johnson likes to look at it, because it kind of gets rid of some of that month-to-month volatility. And I think we'll have to see if in July those numbers start to look a little bit better, if we have a bounce back from that, or if consumers are still going to look somewhat soft.
So what if the result doesn't look as great as we're hoping for, as the market is hoping for? How should we take that report?
Yeah, you shouldn't be too concerned on anything that's happening month to month with these numbers. It is pretty volatile. Even when you take out autos, you take out gas, it's still a volatile number. And you shouldn't kind of get too excited or too worried based on any one data point. I think the right way to look at it, as Bob Johnson looks at it, is this year-over-year data that you're looking on a 3-month average. You're getting rid of those more volatile categories, and you're looking at it on a real basis. And on that perspective, he's looking for anywhere from 2 to 2.5% growth for the second half of 2015. That's close to the recovery averages, and kind of gets rid of some of that noise that we had in 2014 when we had these big weather-related effects, and we're kind of getting back to a more normal environment. I think when you look at that number, it's telling us that, yes, the consumer's doing okay. They're not doing great. We're not getting close to kind of that breakout GDP growth number from a retail sales number like that. And I think we can kind of expect that kind of steady growth to be continuing in this month, kind of no matter what that month-to-month figure really looks like.
Most of second quarter earnings season is now in the rearview mirror, but we will be getting a few retailer earnings reports in the coming week. What are you looking for there?
Yeah, we're going to hear from a lot of the major department store chains, including Macy's, Kohl's, and Nordstrom this week. And I think it's important not to read too much into this in terms of what's happening with the broader consumer. Department stores are a relatively small slice of retail sales, getting smaller. But it does give you some interesting ideas of what's really happening out in the marketplace, at least for their customers. And there's some idiosyncratic things happening with each of these names that we'll be looking out for. For Macy's, they're really trying to kickstart growth. They're doing this through trying to expand internationally. Some e-commerce initiatives are creating off-price Macy's brands Macy's stores, to get people to spend more with them. It might be a little bit early to see a lot of results from that, but we will see how those initiatives are going. People will be watching those very closely. For Kohl's, it's really starting if they're able to find their footing again. They've really struggled with the rise of some of these off-price retailers with e-commerce, and it's really eroded their brands and eroded their moat. We actually recently downgraded them from narrow moat to no moat, thinking that their returns on invested capital, which historically had been higher than average, are really going to come back to be more in line with their peers, and we could see some evidence of that in this quarter. Nordstrom has been doing relatively better. Their Nordstrom Rack stores have been performing well, their new stores have been performing well, and they've had positive comp growth in their mainline stores, even if very modest growth. And I think the real question for this quarter is, can they continue to outpace their peers? Can they continue to show that they are a really great operator when it comes to department stores? And I think that will be a key area people will be focusing on.
Also in the coming week, we'll get a peek into the manufacturing sector with some industrial production data. What do you expect there? Yeah,
last month's industrial production data really showed that maybe the rate of decline in manufacturing had bottomed out, that we're starting to see some signs of stabilization. I think that's really what people are going to be looking for again this month, given the issues with low oil prices and how that impacts the energy and mining economy, given the way that the high dollar impacts the export economy. No one's expecting, I think, a big boom in manufacturing, but I think signs that it's stabilized would be very heartening.
And lastly, you expect the Fed watching to continue unabated next week?
Yeah, next week and the week after and the week after that. I think on any of these data reports, the market's going to immediately focus on what does this mean for the Fed? Does this mean that the rate hike is definitely happening in September? It's not happening in September. The market's really going to be hanging on any clue about this whatsoever, and that's going to be going on for quite some time.
Jeremy, thanks for helping us get ready for the week ahead.
You're welcome, Jason.
From Morningstar, I'm Jason Stipp. Thanks for watching.